get to the market this week, David, I'm feeling like we have a down week. Is that right? What are the charts telling us on Bitcoin? Yeah.
It's hard to have an up week when on Monday the trad markets just got clobbered by some just like kind of bearish macro news, something about the jobs. We don't have that in the agenda this week, but as a result, crypto markets also not doing so great either. Bitcoin started the week at $60,000, down 6.2% this week, currently at 56,600. So remember, okay, Ryan, last week we did this whole segment about how October was the most bullish month for Bitcoin. Like historically, it's the month that Bitcoin goes up the most. October.
It's great.
What month is it right now?
It's not October. I know that. And we started.
It is actually September.
Yep.
So it is actually September happens to be the most bearish month for Bitcoin. In the same way that October is the most bullish, so September is on average apparently the most bearish month. So I don't know why we did that segment last week, but since this month is September, this is apparently, allegedly, the most bearish month that has historical
I mean,
Bitcoin
our message was like basically just, don't look at prices for September and come back in October, and that remains true. So I'm looking at that column for September. This is all the way, Bitcoin price all the way back to 2011, and the most red on the monthly
it's got
of
the most
any
red.
month is very, very much September. The most blue is October. Well, actually, blue. Yeah, October is a pretty good month.
That makes sense that the worst and best months are back to back with each other, because then like October is just like the bounce back out of the September dump.
Yeah. So exactly. I don't know. I thought September would be better, but not starting out promising.
It's kind of funny that the first Monday of September that the markets open, just everything just crashes. Again, in the trad markets, and then it spills over into the crypto markets. Ether started the week $2,530, down 7%, currently at $2,390. Lost $150 on the week. About also the Ethereum ETF flows, Ryan, looking pretty abysmal. Not great. The ETF, the net outflows every day has been somewhere in the single to double digits for the month of August. There was one double-digit outflows on the 26th where we lost $13 million in total AUM. The first 2 days of trading in September, the 3rd of September, negative 47 million. And then the 4th of September, negative 37 million. So it's over $75 million of outflows in the first 2 trading days of September. As bad as it gets.
Well, actually, so before we get too depressed, if you look at these numbers, the vast majority, in fact, almost all of it, more than all in both cases, on September the 3rd and September the 4th were actually from ETH, which is nice.
Oh, yeah, right. It's just like for some reason, ETH just had 2 big days.
Yes.
And then yesterday there has been some 3 million of the 40 million outflows went back into the Grayscale ETH, which has the lowest fees, but $0 million went into all of the other ones. BlackRock didn't get anything. Fidelity didn't get anything. No inflows.
Yeah. So, but basically everything else, the inflows are kind of flat, but ETH continues to drain. That's kind of the story that we're looking at. So
yeah, exactly.
It's bleak, but it's just like not worst case scenario bleak. There are some diamond hands on the institutional side.
If BlackRock was outflowing, that would be a different story. That would be worst case scenario.
That hasn't happened yet. Well, wait for later in September, maybe, for that to happen.
Oh God,
things could always get worse before they get better. The total crypto market caps, where are we at in the week?
$2.07 trillion, hanging on by our fingernails above $2 trillion.
All right, here's the big question. You know how crypto has traditionally gone in these 4-year cycles, right? So the bull market, and then we have the bust all in one like nice 4-year unit, and then we kind of repeat. And we've done this a few times in crypto, like 3 times at least. Some are calling this like the 4th cycle, but the 4-year cycle is dead according to some investors. This is a report from Outlier Ventures, and let me lay out the case for you here and get your response to this. Basically, the fact that following the 2024 halving, Bitcoin experienced the worst price performance more than 125 days after the event. So the price is now, so the halving happened in April, right? It's April, I believe. The price is now down 8% compared to previous cycles. Last few times this has happened, we had a 22% increase. So 8% down compared to 22% up traditionally. And the report continues. We believe that 2016 was the last time the halving had a significant fundamental impact on Bitcoin price action. Every halving gets more muted in terms of the like total percent of Bitcoin supply. So that would kind of make sense. And they're saying basically 2020, the reason that Bitcoin prices went up in 2020, that was kind of just coincidence. It was more to do with COVID and the liquidity injection than it was to actually do with the halvening. So the conclusion is the argument that the 4-year cycle still holds in 2024, but that the Bitcoin ETF approval just pulled forward the demand is flawed. It's not true, this report says. The Bitcoin ETF approval was demand-driven, and the halvening is supply-driven. Anyway, basically the report is saying, it goes on to kind of like offer some more data points here. The 4-year cycle is dead. It's not a thing anymore. What's your take on this?
I think that checks out. The 4-year cycle is and always was going to die. Like you can't just have algorithmic 4-year price increases. Like eventually that gets priced in. Like, markets are efficient. The fact that like the claim that the 2020 cycle was a coincidence, I also think is very strong. We just had this idiosyncratic event called COVID. Idiosyncratic money printing happened to line up with the 4-year halvening. And the claim that just like the reducing Bitcoin inflation is just becoming a smaller and smaller impact on the market also just checks out. So I believe it. It makes sense to me.
I'm not sure yet personally whether I'm ready to abandon the 4-year cycle. Just
I feel
because
like it's currently being invalidated.
Yeah,
we're watching it being invalidated
right now, but it's September, David. It's always darkest until the dawn. And by the way, it's not because of Bitcoin having supply. It's more kind of the global macro liquidity that Raul Paul talks about so much, right? So the tides of liquidity ebb and flow, and that tends to happen on these 4-year cycles as well. Anyway, that's
I always
something
thought
to
the 4-year
at.
cycles was supposed to be like internally to the crypto industry. That's like what we do. I think if explaining it, justifying it due to exogenous factors, I think also is antagonistic to the idea of like the 4-year Bitcoin cycles, which the rest of the crypto industry follows.
I mean, this is the conclusion of the report. It's time for founders, investors trying to time the market to focus on more significant macroeconomic drivers rather than relying on the 4-year cycle. They're basically
100%,
like, don't worry about the 4 years. Just like go focus on other things that are happening in macro. David, I've got 3 takes for you on the lackluster price performance I want to run by you. These are like to answering the questions of why isn't crypto doing anything in this market? So here's the first one. Maybe we are in the show me phase of crypto. So
what's that?
My base case is still that we get a strong Q4. Crypto rockets. 2025 is going to be good. Similar to, you did that episode with Ledger on kind of like charts and what that looks like. And he's like, hey, this is just the calm before the big bull market in 2025. That's still my base case. But there is another theory, which is we might be in the show me phase of crypto. There's a fair chance that we don't get the new inflows, the new attention from investors. We haven't seen retail come aboard this cycle like at all. It's all the old, crusty people who've been in crypto for a while from last cycle. We're still here.
I do feel crusty.
I feel a little crusty too. But until crypto actually shows the world the new apps, it won't actually get the new retail interest. And here's a data point. After the .com bubble and pop, it took Amazon 10 years to reach all-time high after that. Like 1999 all the way to 2009. That's Amazon. Different rules apply for crypto. I'm not saying it's 10 years, but I am saying there could be this show me phase that the market expects from us this time around. They're like, hey, we don't believe it anymore. You can't get away on that kind of the hype train. We actually have to see something. So the first possible reason why we've had lackluster performance is maybe we're in the show me phase.
Okay. That I kind of think checks out. The .com bubble like brought awareness about the internet to everyone. And so like, I think that's what happened in 2021. Like everyone knows about Bitcoin. Everyone knows about blockchains. Yeah. Like everyone knows what crypto is now. It's no longer a lack of awareness.
And it was also pretty accessible. It was all, it's also been pretty accessible. Yeah.
So that checks out to me.
Okay. So that's the first one. The other is the Fiscandi's take. Basically, crypto isn't the cool kid anymore. Okay. And this kind of pairs well with the first take. He says this, another point on why pure narratives won't save us. Crypto is not the coolest kid on the tech block anymore. So it needs real products that people use. This cycle, AI is firmly taking the spot as the cool kid on the block. As digital finance has nothing to do with a digital super intelligent god, basically retail and investors, they've pivoted to AI. There was a time where there was kind of a gap. We'd gone through our mobile phone phase. We obviously prior to that gone on the internet. We stretched all the Web 2 type use cases, and blockchain was the next narrative big tech thing. Well, the world has moved to a different narrative, and that's AI. AI is getting all this. AI is the cool kid on the block, no longer crypto. And so that's another reason for lackluster performance.
Also checks out. I also think that's right.
Okay, well, and here is a third take that is maybe optimistic in a way. Depends on what happens, I guess, post-November. But the poster says from Split Capital, a more unpopular take: crypto has never had a product market fit problem. It has only had a regulation problem. If regulations were clear and flexible for new products to work at scale, financial institutions would integrate directly with on-chain products. The take here is basically like the other reason for lackluster performance is actually not product market fit. Like, we do have the killer apps. The regulators just won't let us deploy them. They won't let us legalize tokenization in a way that brings this to the masses. Right. So until we get through that, we have the product market fit, but they're just like holding the entire industry back. And this probably
I also
applies.
think that checks out.
Okay, so those are the three reasons for lackluster performance, and all of those check out in your mind.
Yes. The bleak side of this is that all of those are very hard problems. Like, okay, in order to get out of the show me phase, we need real products. In order to get real products, we need good regulation. And good regulation, even with a more favorable administration in the White House, still will take time. Like, we still need Congress to draft good regulation and pass it.
So all of this might mean this cycle is going to take a little bit longer.
Yes,
I mean, that would be the conclusion here. I mean, things after November could possibly accelerate things if you had the regulatory tailwinds in our favor post-November. Maybe you get this faster. I think that's going to be important on the regulatory side. But to your point, it takes a while to build things. And the builders are doing things in the background. I mean, there's like Polymarket. There's great things going on in the layer 2s. But it'll take a while to build out the kind of the mainstream use cases probably.
I do really like this last take though, where crypto never has had a product market fit problem, even though everyone's the memes where are the users? We do have a product market fit. That's kind of a contrarian take. I guess that's why he leaves with it being unpopular. But there is this idea that if this is true, which I do kind of think tokenization super real, Wall Street chomping at the bit in order to make this work. There is this pent up value that's being created that's not being expressed in the tokens because builders are still building. Progress is being made by the industry. When we finally get the stars to align, if that takes 1 year, 3 years, 5 years, the longer it takes, kind of the more explosive the bull market is as a result of that. Once we clear some of these cloudy skies and then AI is no longer cool, and then AI learns that it needs crypto, and then we also get rid of the regulation problem, all of those things line up. The longer it takes, the better that everything will line up. It's kind of my hot take.
Here, the question though for people listening is okay, what should I do? And I think this is sage advice from DC investors, kind of the consummate holder archetype. He says this: look, I don't know when we go up. I just know that I've held through hell and back and hell and back and hell and back again and again. And I simply don't fumble the bag during boring times like this when everyone is getting angry and anxious and thinks it's all over. The worst possible time to fumble the bag. And
just accept the bleakness because that's what happens. That's the last thing that happens before things go up.
October is coming, guys.
To continue leveling up your crypto game, then you need to get on the Bankless newsletter. It's the world's most popular crypto email and is completely free. Just click below to sign up.